Good afternoon, everyone. Welcome to today's webinar sponsored by Kakubo, Closing the Gaps, Understanding and Mitigating Your AP Compliance, Data and Cyber Risks. We're going to give the other attendees just 2 more minutes to get logged on, and then we'll begin promptly at 2 minutes past the hour.
You may want to give a few more minutes, Eric. Just the number of attendees that's logging on is escalating at a rapid pace. Like a bag of popcorn, that the popcorn has started to pop at this point.
Thank you, Brian. Thank you very much. Yes, everyone that's on, we're going to just give folks just a couple of minutes to get logged in. There was a very large, very high number of attendees, registrants. So just bear with us here. Okay, I can go ahead, I believe, and at least start with the introductions. Again, I want to welcome everyone to this afternoon's webinar, Closing the Gaps, Understanding and Mitigating AP Compliance, Data and Cyber Risks. I want to give a special thank you to Vicki Frederick with Kakubo for all her help in organizing this event. Thank you very much, Vicki. Just a few things before we begin. I think everyone knows this GoToWebinar, you're in listen-only mode, so you can listen either through your PC or you can dial in to the number provided. We all want your questions. You're in listen-only mode, so if you have a question during the event, feel free to use the chat box in your GoToMeeting panel. That you can place a question right there in that box. It's sent privately, and we'll do our very best to answer these in real time. If we don't get to them in real time, we'll certainly address them at the end. And of course, a PDF of today's presentation will be emailed to all participants at the conclusion of the webinar. My name is Eric Hayes. Again, thank you so much for joining. I'm the Vice President of Services with Fiscal Technologies. I've got 2 decades experience with financial operations and recovery audit services. My passion is providing, really AP, P2P, and internal audit teams, people such as yourselves, with overpayment and fraud prevention technologies, best practices, and strategies. I'm joined today by a couple of fantastic subject matter experts, the first of which will be Brian Cook, SVP of Higher Education for Paymerang. Brian has 19 years of experience working with various educational procurement and consortia programs. Brian is really an expert when it comes to lowering the cost of delivering high quality education, providing efficiency gains, and protecting institutions against the proliferation of fraud. Brian leads the partnerships with several associations and coalition procurement programs for Paymerang, and he will identify and share best practices on reducing exposure to common compliance and fraud problems that plague institutions today. And then batting cleanup today will be Blake Wells, Vice President at IMA. Blake joined IMA in 1996 and led the development of the IMA private college insurance and risk management practice. Blake works with many colleges and universities to assist in the design of cost-effective and efficient insurance and risk management programs, including employee benefits and athletic and student health insurance. Blake collaborates with private college leadership at the state and national level and is involved directly or as a sponsoring partner to many associations, including the Kakubo. Thank you, Blake and Brian. And so today's agenda, again, this is Eric. Today's agenda is we're going to just kind of lay out what we're in, this unexpected storm. I will then take item 2 on the agenda, which is mitigating AP P2P transactional risks. I will then pass the baton over to Brian. He will handle agenda item number 3, mitigating payment risks. And then Blake will handle agenda item number 4, risk management and cyber insurance. And then at the end of Blake's presentation, we'll open up the webinar for questions and potential calls to action. Okay, so here we are. We're all in this this unexpected storm, a really unprecedented storm of threats, which really in the form of non-compliance, risk, and fraud. I found this article actually was published last Friday. Liz Clark with Nakubo is quoted as, "This situation was completely unexpected," and oh, how that is so true. What are we to expect during this COVID-19 business disruption? And there's really are 3 phases. So the first phase is the acute phase. That's what we're currently in, and honestly, the experts are saying this may extend several more weeks. I think that could actually be optimistic. This acute phase is very, very disruptive. I refer to it as a forced decentralization across all industries. It's incredible. And from an AP P2P perspective, there are going to be transactional errors, and fraud is very prevalent during an acute phase of some sort of event such as this. And so transactional errors are going to occur, fraud is prevalent, payment errors are going to occur. We're then going to move into the restoration phase. And so the best guesstimate for this particular phase is 6 to 9 months. That's when folks are going to be restoring some sense of normalcy. I believe, based on my experience with similar events, that there's still going to be a continued heightened risk of fraud. There will be potentially lower transaction volumes, but an increase in fraud for sure. And finally, we'll move into, at some point in the future, a recovery phase where we can all resume kind of pre-crisis levels, pre-crisis business process and practices. That recovery phase will include some rethinking of our existing processes. And so what I would want us all to kind of be aware of is that it'd be smart for us as as individuals and as organizations to start planning for the recovery phase as soon as we possibly can. Really kind of during the restoration phase, we need to begin thinking about the recovery phase. The CFOs that we speak with at Fiscal and our client base are concerned really about 3 things: conserving cash, finding sources of latent cash, and then comprehensive planning to protect your working capital. And so this webinar is hopefully going to address all of these desires. And so from our standpoint of AP and P2P risks, I think the biggest thing really that I can share with everyone would be the KPIs that you should be measuring or thinking about measuring and monitoring. We can't really change anything that we're not measuring. And so I get this question asked of me quite often: what are some of the top KPIs? I'm going to include some for today. It's also worthwhile to note that running a transaction through the traditional procure to pay process, let's just for an average say that it costs about $60. We have $60 worth of cost to process a transaction from requisition to payment. And so APQC and Aberdeen and Ardent Partners, they all say that when you move into a top quartile, best in class category for processing P2P transactions, there's a significant dollar savings to be had. And they call this the procure to pay performance gap, and it's between $5 and $15. So getting to a top quartile is very, very important, and especially when our CFO, our financial leaderships are really trying to conserve cash and protect working capital. And so, real quickly, go through these. I've got 10. Again, you're going to get a copy of this presentation. I'll quickly go through these. So, percentage of invoice exceptions. And so, from my experience, the best of the best, the very best top quartile companies in the world still have somewhere between 6 and 10% of exception invoices. So you need to be monitoring your exceptions, what invoices aren't processing straight through. And as you're doing that, we need to understand the source of the error. Is it a vendor error? Are we going to see an increase in double billing schemes, for example? Is it an internal error? Could be invoice coding noncompliance or vendor master setup noncompliance. Is it a process error? Is OCR misreading O's and zeros and S's and fives and I's and L's and ones, for example? And then the type of errors. What type of error are we experiencing? Are these input errors on our side? Okay, so are we having a high number of errors with respect to invoice amounts, invoice dates, invoice numbers, so invoice coding noncompliance, PO number errors? Are these supplier errors? So understanding the percentage of invoice exceptions, the source of the error, and the type of the error is very, very important. Percentage of low dollar transactions. This one's a little tricky because I know many of you are scaling back your P card program, so you're just going to probably have a higher number of low dollar transactions. And this is in terms of transaction volume. So best in class organizations typically have less than 25% of their transaction volume are these low dollar, less than $500 transactions. We want to push those to a P card program. Another thing to kind of consider is as your low dollar transaction volumes are increasing, and we're in this global crisis, you're going to get inundated with calls from recovery auditors wanting to help you identify some of the payment errors that have been made historically. Well, here's the big problem with that is recovery audit firms don't typically look at low dollar transactions. And so just be aware of your percentage of low dollar transactions, potential duplicate vendors, right? And so along with that, the percentage of low and no activity vendors. So do you have someone assigned to scrub and cleanse your vendor master on a regular cadence? We'll talk about fraud a little bit later, but fraud attempts are going to be on the rise. You can certainly prevent some fraud by cleansing your vendor master, and so make certain that there aren't any duplication of records that someone internally could use to perpetrate a fraud. Make certain that you're watching these low activity vendors. One of the most common schemes you're going to see is a bogus vendor trying to get a very low dollar invoice approved, processed and approved and paid, and they're likely to then slowly begin to ramp up those invoice amounts. So just watch your vendors that have, a low number of transactions, 2, 3, 4, 5 transactions. And if you've got some low activity or no activity vendors that you can cleanse completely and deactivate as many as you can very, very quickly. This is a very urgent request that you get your vendor master cleansed. We're going to have credit memos. There's going to be events canceled, travel canceled, lots of things are canceled. And so make certain that you're monitoring your percentage of credit memos and you're tying those to the original invoice. Just a straight productivity metric is invoices processed per your FTE, your full-time equivalents. These numbers are going to go down most likely. And so can you reallocate some people to be more strategic as our invoice volumes are decreasing? So pay attention to this very good productivity metric. Brian's going to touch on electronic payments, but this is the time to move as many of your payments to electronic format, and I'll leave that for Brian. And of course, your PO rates. Make certain that you're monitoring your purchase order rates. In terms of specific, really tests that can be monitored for fraud, this is something that you can pass to internal audit or collaborate with internal audit on. But I'm going to share with you 10 or so different tests here. Just note that individually, these tests really don't mean a whole lot. But as vendors begin to fail multiple tests, that there should be a heightened level of risk that you're aware of, and you can begin to then monitor these vendors. And so to start out with, your vendor master, employee master, you really should talk about internally doing a scrub to make certain that if there are any employees that are also vendors, that you're aware of it, and then build a cadence to do this on a recurring basis. But think about, tax ID numbers versus social security numbers, addresses versus addresses, bank accounts versus bank accounts. This is a pretty simple way to identify something that could potentially be disastrous in terms of a fraud. So this is a great test you should be running. For those of you that understand what Benford's analysis is, just real quickly, it's essentially the distribution of an invoice amount, the leading digit of the invoice amount. And so if I have 100 legitimate invoices, Benford's law states that 31 will begin, the amount will begin with the leading digit 1, 18 with the leading digit 2, 14 with the leading digit 3, 11 leading digit 4, and so on and so on. What does this mean? This means that it can identify invoice amounts that are made up, they're contrived, they're not legitimate. And so it's a really good test, especially when you combine it with other tests. Credit note frequency, monitor your vendors, make certain that you don't have a unusually high amount of credit notes with one particular vendor. Monitor your date entered and date paid, right? And so pay attention to weekends and holidays when people shouldn't be working. If you know more, if you have more analytics and insights on your trending for the percentage of payments that you pay by day, just monitor that information. Again, weekends and holidays are a red flag for entered and paid dates for invoices. Do you have the ability to look at your invoice numbering structure of your vendors? For example, vendor ABC, they're always, or most of the time, it's a 6-digit numeric invoice numbering structure. And so do you have the ability to make certain that all the invoices are falling in line with that invoice numbering structure? And if not, why? Why is there now an alphanumeric number, or a numeric number that's something other than 6 digits? Look at even dollar amounts, so invoices that have and suppliers or vendors that are providing you invoices that are even dollars, so no tax, no freight. Transactional spikes, you're going to see more and more bogus vendors trying to get invoices in, approved, and paid. The old ink toner cartridge scam where they send you an invoice for 20 bucks for toner cartridge. Someone processes it and pays it. Next thing you know, they're invoicing you for $1,300. And so just watch those transactional spikes. Anything really that's 8x, 8 times or higher, we need to kind of be aware of those spikes. These are a couple that I think are interesting. Initials in vendor's name. Scour and research your vendor master for ESH Incorporated. If I were going to perpetrate a fraud and create a bogus vendor, I might use initials, my own initials. I might use a more common initial like an IBM. So just monitor that. Look at your vendors that their remit to, or their primary address, the primary address is a PO box. Again, ESH Incorporated at PO Box 114 in Jamestown, North Carolina. That's not a legitimate business. And so you're going to see an increase in fraud in terms of just illegitimate business addresses. And so understand that there are also sources out in the public domain that you can get a database of all prison addresses. And I'm sure some of you are chuckling, but we're going to see an increase in white-collar crime being run out of prisons. This is very common in these sorts of situations. You can also get a database of the UPS stores and the mailbox, et cetera, and those various types of stores. And so just be aware of who you're doing business with. Make certain that they're legitimate. The good news is that there is structured data elements, right? within all of your ERP systems that you can leverage. And so we at Fiscal Technologies have a solution called NXG Forensics. It's a commercially available technology that sits in the cloud. And what it does, and there are other commercially available products out in the marketplace, but it looks at the transactional process and all the structured data elements within this. So think about from vendor master setup to onboarding to the requisition and ordering process to the three-way match, the receipt and the invoice, and approving the payment. Prior to making that payment, NXG Forensics essentially looks at structured data elements. And we have 17 years of experience with hundreds of algorithms and machine learning and AI modeling that we can take these structured data elements, okay, and we can audit for a client every structured data element of every transaction and every structured data element of every vendor master record and banking change every single day, and compare those structured data elements to every similar element that we have in our history file, which is typically 3 to 5 years. And we can run fraud tests on every invoice and every vendor every single day. And so just to, again, there's multiple technologies available in the marketplace. This is just one example, but again, we audit 100% of your transactions every single day, identifying various forms of risk, noncompliance, and fraud. We prevent the payment of the payment error. So we prevent the payment of that potential payment error that was posted to pay yesterday. I can prevent that payment today. We mitigate transactional risk. And because we're auditing these transactions, and we have the structured data elements such as authorizer ID, user ID, approver ID, we can provide you with evidence of the defect. And so we can identify the source of the noncompliance. This is a fantastic oversight technology of all staff, all vendors. As you're in this forced decentralization mode, we can provide you with oversight and essentially provide you with near real-time correction. If it's me and I'm entering leading zeros as I'm processing invoices and that's not our policy, you can come to me the next morning and say, hey, Eric, you're not supposed to be entering leading zeros. We almost had a payment error because of that. And so we really protect and empower AP and finance. In terms of our company, just one real quick commercial, we've been mitigating risk and ensuring transactional oversight since 2003. We have a global higher ed client base. To date, we've protected over 1 billion transactions, 7 trillion in spend. We have a singular focus. All we do is provide this one NXG Forensics cloud-based technology, this forensic tool for you to help you create best-in-class financial operations. In terms of a very quick call to action, what we've agreed to do is provide anyone on this call with a complimentary forensics risk report, so an independent analysis of high-risk payments, vendors, vulnerabilities, noncompliance, all the evidence, and really prioritize the process improvements that will lead to the cost savings that you're going to want to be doing during the recovery phase of this epidemic that we're in. And it's very simple. All we require to provide you with this complimentary forensics report is one data extract. Within a couple days, we've got results to you, and it's a full analysis of up to 3 years of your data. And so I appreciate your time. Thanks for letting me do that quick commercial. I'm now going to turn it over to my dear friend, Brian Cook with Paymerang. Brian, I can see your slides. You're now free to go. Brian, I can't hear you. You may be muted.
Eric, thank you for the introductions that you provided early on, and the of everybody, as well as some outstanding information related to how you can mitigate risk on the front end of the procure to pay process. And I know that when you hand off payments to us, virtually all of the risk is mitigated. And for everybody's benefit, my name's Brian Cook. I'm the SVP of Higher Education for Paymerang. We are a premier provider of electronic payment automation and reconcilement in higher education. I've attended several Kakubo events, and many of you might know me as the beer pong guy. If you make a few in the cup, you get one of my journals, and we give away great prizes and have a lot of fun at those events. And we really enjoy everybody's company, and we severely miss you all this year. I would like to say that just generally before I begin that AP forensics is an exploding industry. It provides unparalleled insight into the issues that you have in the entire accounts payable process. And not only does it help you identify them and fix them before they become an issue, but then it'll also help you become best in class, as Eric said, which saves most institutions between $5 and $15 per invoice. In my previous operations role, I simply did not have the kind of data analytics or time to do what they do in real time, and it's a fantastic, product on the market that I wish I had access to in my operations days. And as Eric said, there are several folks out there offering it, but it's an exploding industry. One of my higher education clients recently launched a forensic software program, and not only were they able to identify most of the issues in accounts payable very quickly and resolve them, but they also found over $800,000 in overpayments that essentially paid for the software itself. So within 6 months, they became best in class, and it was all paid for. So highly recommend that you guys look at that, because they take and find issues that are needles in the haystack and bring them right to the surface so that you can mitigate them before they become a problem. And then essentially then once the payments are approved, that's where some of the real challenges come in. And I'm going to be talking about what Paymerang does and what you should be thinking about relative to mitigating payment fraud. So I'm going to be talking about the key threats of payment fraud today, the 4 layers of protection that's available, and the practical steps that you can take. There's so much information that's available. I just want to let the audience know that if there are any particular areas that you would like further discussion on and further detail on, we have many content experts that can walk you through step by step each one of the particular recommendations that we would make. But let's really start talking about the various payment types. Most of the institutions that I work with today are still writing checks in some form or fashion, whether that's student refund, employee expense reimbursements, people that just simply won't take card or ACH. And as you know, as many of you know, fraud is still the #1 risk that's out there today. It was really about 82% of businesses were hit with some sort of payment fraud in 2019. So checks are still a major issue. And if you want to invite fraud, just keep issuing checks, because it has everything the scammers need to wreak havoc on AP. And oh, by the way, they are still the most expensive form of payment. So, ultimately, the biggest threats that we see with checks today, and we manage positive pay for our clients, but we see duplicate checks, dual cashed checks, both counter cash and mobile deposit. And then we see about a 40% potential payment fraud on internal issues around checks themselves, because there's a lot of, as Eric mentioned, there's a lot of ways that you can manipulate vendor IDs in the system that look legitimate. So the key threats are duplicate payments and internal fraud. From a check perspective, for those of you, and about 50% of the institutions I talk to today are not using positive pay. And positive pay simply is a file you provide to your bank that allows that bank to validate the payee and the amount, and it will not allow that payment to go through if those don't match up, and it protects you against any fraud. It's an expensive service, but it's probably one of the best banking services that you could possibly have in place, and it will secure those checks. The other thing that you can do to try to mitigate risk about checks is really stop paying your vendors by checks. start using more and more electronic payments. And again, really best in class that I see in the marketplace is about 70% electronic today in higher education. That still leaves a third of those institutions writing checks. When we talk about ACH, the big question in the marketplace is ACH the solution? And while it's more secure than checks, and it's faster, it's more reliable, it works like clockwork. Really, the downside is that if you're the one that has to acquire, manager, and secure that vendor banking data, it puts you in significant risk, both in terms of system breaches and also the phishing and hacking scams that come with ACH. We see, generally speaking, that the most fraud in terms of dollar size happens with phishing scams and changing of ACH banking information in Colleague and Genzabar and Workday and a host of other the main college ERPs. So while ACH is fantastic, you really have to secure that information and or have someone else secure that information for you and put serious controls in place because ACH is leading to the largest losses in the marketplace. It's also the fastest growing. According to the AFP, ACH credits is the fastest growing issue that they're seeing in fraud for payments today. So something's wrong in this. So what we generally say is make sure that you are trained, certified, and compliant with all NACHA regs, and you're following all of those recommendations related to how you should manage all of that information, including your SOC 2 Type 2 compliance. And then we say, is card the answer? So you've got checks, ACH, and now we've got all these card different payments. We've got P card, V card, single-use cards, preloaded debit cards. There's more cards than everybody knows what to do with, but generally speaking, card payments, which amounts to 12 to 15% of the higher ed acceptance rate, provides you with the maximum amount of liability protection from your bank for unauthorized payments. If you can opt for single-use virtual card accounts versus physical plastic, so as Eric mentioned, we talk about P cards, that's physical plastic. The last thing you want to do is try to issue payments over the phone or provide an open credit card with a credit limit to anybody, because credit card fraud is growing at 20% today. So you essentially want to really try to keep those as single-use cards that are loaded for the exact amount of the invoice. And once the vendor processes it, it expires. And of course, you can earn rebates on that as well. The key consideration on cards that you have to really think through is that most card programs add significant work to the accounts payable department. And so the more work you put on AP, the less time they have to be vigilant with fraud. And the management of the credit lines and credit reconcilement on card transactions, both at the department level and the centralized AP level, is a real issue today that it's causing an overwhelming amount of work, which again is really preventing them from being ever vigilant on the front end process for fraud. So what we recommend, cards are great because they limit your liability, but incorporate single-use virtual cards in addition to your P card process, and try to limit the P card process to lower dollar transactions. There are really 4 layers of protection that we're going to talk about today from an accounts payable perspective in payments. Those 4 layers of protection are how you protect the payment, securing the operations, fortifying your network, and locking down compliance. And essentially, I would share with you that I'm an expert on the first one and the last one, and IT typically is the expert in the operations and the network. So I'm not going to go into, there's over 30 different, if you want to say, action items or processes that you should be following related to these 4 layers of protection. I'm not going to talk about all of them today, but I will list them at the end of the presentation. And if there's any one of those that you would like to talk about further related to some gaps you might see in yours, we would be glad to get on the phone and walk you through what we do to secure payments every day. So really, from protecting the payment side, if you're writing checks, we obviously highly recommend that you enroll in Positive Pay service with your financial provider. Again, it is the number one best banking product there is. Although the downside of Positive Pay is the cost, and the other downside is that it adds a lot of work in terms of delivering the payment file, reconciling and mitigating those issues as they come up. So there's some good and some bad with Positive Pay. On ACH payments, in terms of how you can essentially protect those, we essentially say get it out of your ERP. That's the simplest way to put it, is that make sure that it's either encrypted in your data within your system, completely encrypted, that your people can't see, frankly, or that you get it out of your ERP and put it into the cloud, either with your banking partner or a third-party service, so that you guys are, if you have a data breach, that information isn't going to be culled out of your system. How do you protect virtual cards? We talked about this a little bit, but limit it to single-use cards that are preloaded for the amount of the payment. Once it expires, then the next time that particular vendor they get a card payment, you're going to want to make sure that they'll get a new CVV expiration and amount. And then really from a procedural perspective, and this is what we say in our shop every day, if you're in doubt, don't do anything, ask. Before engaging with any vendor, whether it's an email, a phone call, a fax, a letter in the mail, do not take any action. Stop, call the vendor of record, verify any changes, and essentially then, and we even go to the extent, for the rest of the team's benefit on the phone, we go to the extent of asking the vendor to validate the change request, but also several previous invoice line item details. So we'll say what was on invoice XYZ and how much was it for? And we'll go back sometimes 6 months. And if that vendor has that data, then you can be rest assured that they are who they say they are if they have that data in the system. Scammers can have your last probably 3 or 4 months of invoices that they've clipped every single time an email's been sent. So try to go back as far as you can in terms of asking some of those security questions. So that's how we protect the payments in all this. We also use debit block to prevent people from pulling payments out of our system via ACH debit. And so Positive Pay, debit block, single-use cards, and secure ACH payments through encryption, and making sure that your folks are very diligent on dealing with changes. Securing the operations. So really, this is where we get a lot into the IT world. But they're also, I'm a former ops guy, so we say, this is overlooked a lot. There's a we call it a secure environment, but it's a combination of a clean desk policy where there's very little sensitive information available out there in the office view because you have people walking by constantly. And we all, at my operation, we use screen guards so that only the person that is looking at the screen, nobody from the side, nobody over the shoulder, only straight on, can actually view any payment information or accounts payable invoice information as well. So we use a clean desk policy, and then we shred any sensitive information, and we delete any sensitive information from our system. And we constantly then conduct security awareness training. Even myself, outside of the office, we have to go through several different testing protocols related to, I say testing, but it's really education about what the threats are What are the latest threats? How do you notify them? How do you recognize them? How do you flag those, send them to IT, and then you go through testing to make sure that you're considered approved in the operational world. So we do a ton of security awareness training and testing to detect suspicious links, because even myself, I've unfortunately thought one of my colleges was emailing me, and I clicked a link and they had access to our system. So even I made mistakes, and I know what I'm doing there. Fraud detection, this is where the AP software comes into play, really. And that is, as a general policy or good rule of thumb, just verify any anomalous changes made to vendor account information, assign fraud scores based on recent account changes, and that can be done all automatically through a AP forensics software. So we do this internally through our own software, but we use a third-party SaaS software to verify any anomalous changes. And I think even Eric, his group will tell you that any time a banking information is changed, those all have to be flagged and approved prior to it moving to the next level. So you're going to set up procedures, you're going to go through training, you're going to secure your environment, and then you're going to figure out how to detect fraud from a systemic perspective, because frankly, accounts payable personnel typically aren't fraud experts. So that's going to rely both on the operations team as well as IT. We're going to fortify then the network. So we call it endpoint protection. Endpoint protection simply is that you're going to ensure that all your computers that are running sensitive information or processing payments or entering invoices, is that only safe and trusted software is on that, and it's approved by IT, and that there's whitelisted technology to protect against all forms of malware. Because the scammers are getting better and better and better, everything looks legitimate today. So email defenses is also something that we absolutely recommend. We deploy layers of spam and phishing defenses, phishing spear, phishing detection, email encryption, rights management to protect the sensitive email content. Email is just a great communication tool, but it's also where most of the gaps lie here. So beyond that, we've got vulnerability management and threat protection. Really, the threat protection in here is enacting intrusion and anomalous behavior detection capabilities with multi-factor authentication. That is generally driven from your forensic software or third-party SaaS providers as well. So the last thing I will tell you is from your fortifying the network is that IT should constantly be outsourcing expert penetration testing in this process. And I'm not sure if everybody's doing that today. At least I don't hear that on an often basis, but really hire a firm to see if they can't get into your system on an ongoing basis. Compliance is really where I spend most of my time helping my clients. And I would say most of the higher education clients I work with are not in compliance. And so we say lock down your compliance really from a NACHA perspective on your ACH payments. You want to make sure that you're following all governance and all the steps required by NACHA to be NACHA compliant. I recommend if you're making payments in-house with ACH that you do become NACHA certified, and that your audit group audits you against the NACHA rules, so that you can essentially say you're NACHA compliant. SOC 2 Type 2 is another type of certification from an audit perspective. It's really in accordance with the protection and management of sensitive banking information and sensitive consumer information, and how you handle it and how you deal with it. SOC 2 Type 2 is the most stringent audit you could possibly go through. Most people would fail that particular test in terms of AP, but you might want to start engaging your audit firm to audit you against that related to electronic payment information. Most of my clients are PCI compliant, but if you haven't gone through the payment card industry or PCI DSS security, there's several different items that you have to go through. I think there's 12 different items that you have to adhere to become PCI compliant. And last but not least, in the compliance world, we're going to be talking about OFAC. And OFAC is something that I want to say 95 to 98% of my institutions don't really pay attention to. And that is the Office of Foreign Asset Controls. What it is that the Treasury Department has a list of companies that you're not allowed to pay because they're involved in various activities. That list has exploded. And when you're doing vendor maintenance, when you set up your vendors and you do your due diligence and you get their EIN and their W-9s, do an OFAC search on the Treasury Department's list to make sure that you're not paying somebody who is on that list. The fines are astronomical, and the number of companies has exploded since they added money laundering and narcotics to the OFAC list. So you're going to want to really investigate and learn more about OFAC and how you can become compliant. So lock down your compliance, and you're going to be in good shape. So really, and I know I've probably chatted longer than I should have, but there's a lot of things. There's over 30 different steps that we recommend that you take to secure and prevent payment fraud. And in any of these, we'd be happy to chat further with you in the process. And want to thank you guys for your time today. We hope that everybody is safe out there, and we look forward to seeing you at the next Kikubo. Paymerang, also, as Eric mentioned, that we are also able to do a free preview just by using the same data you would provide Fiscal Technologies in terms of payment file, to share with you how Paymerang can provide those 30 various items that we require or recommend. That we provide those instantly within 30 days, and we can really help you with all the compliance and security and fraud protection in that. And with that said, I really want to, again, thank you. It's now that Eric and I have reviewed our firms, I'm going to turn it over to Blake Wells of IMA, who will address cyber risk management and insurance best practices. Go ahead, Blake.
Thank you, Brian. We do have a question. We might as well address it now just so we don't run out of time. It's regarding single-use cards, Brian. It says, the question is, we have found single-use cards are not always single-use. Vendors can swipe multiple times and can credit back to the number. Is this typical?
Well, they can only charge up to the amount that is on the card. So I'm not entirely sure what they can swipe it multiple times because it isn't a card that you swipe. Single use, they would typically process that through that virtual terminal. But what we see is a lot of vendors who will pre-auth the card. So that's like swiping it, if you want to think of that, right? They're pre-authorizing it to make sure there are funds on the card, and then they run a second transaction. And that creates a lot of the credit concerns that we talk about in terms of reconcilement, because you're essentially seeing two transactions, one pre-auth, and if it doesn't drop off before the invoice shows up, your books won't stay tick and tied. And that's why we recommend that you work with a preloaded debit card or virtual card that actually includes the pre-auth on that card, and that will drop off and will not affect your books. But I think I understand what the person's asking. I hope I answered that, but that is one of the big downsides of using a credit facility is multiple swipes or multiple attempts to hit the card. And if it's an open credit limit, it's even worse. So I hope I answered the question.
Well, and the chat screen for any of you that have questions, and if we do run out of time, any questions that you post, we will answer those when we send out the slide deck and the recording of the webinar as well. So keep posting any questions that you have, and we'll try to answer as many of them here at the end of the presentation. And with that, since we only have about 10 minutes left before the top of the hour, I'm just going to hit some highlights from our standpoint. You can see why we like to partner with Eric and Brian and their firms, and that's really part of what we feel our role is as a higher education insurance broker and risk management provider, is collaborating with best-in-class providers like Fiscal Technology and Paymerang to help and walk alongside your institution as your outsourced risk manager, and we're very proud to be associated with them, and obviously with Kakubo and Vicky and her team. So what IMA does is we really focus on being that risk management provider. So today I'm just going to focus, and again, my slides are going to be more of resources that you can go back to have. If you're a CFO, you can talk to your IT about what resources are available. So this is just a basic risk management 101. Eric and Brian have talked a lot about the prevention side and the detection side and the continuous monitoring and analysis side. Where risk management from an insurance standpoint and insurance placement comes in is really the response as much as it is the prevention stage. So we're going to talk more about that here in the next couple minutes than anything else. I'd be remiss if I didn't talk about COVID-19. I'm not going to read this entire slide, but we are seeing a massive uptick, obviously, in phishing attempts through fake organizations. And if you haven't already, please make recommendations to test and retest all your teachers and administrators that are now working off-site. You can't do enough testing. Also, this is a good time to review your incident response plan if you have one, and if you don't have one, it's now time to probably put together one, and obviously we have resources available for you in that regard. And one thing that people skip over is the third-party vendor access and shared data. 50% of cyber incidents since 2016 and included insiders, vendors, and third-party partners. One thing I would like you to comment in your dialog box, your chat box or your question box is I've listed some resources here. If you have some resources related to COVID-19 or anything that's been helpful from a cyber risk management standpoint, we would love to share those with everybody on the call today. So if you feel good and want to share, that would be great. IMA does have a COVID alert risk center, so you can just type in IVID COVID alert center and it'll take you right to the page. There's now over 40 different resources and webinars that have been recorded related to not only insurance in general, but also higher education. And then within that, you can also find the cyber risk management report related to COVID as well. Most of you on the call understand that this is no longer a board issue, and cyber criminals don't just set something up and then just hang back and don't do anything. They are constantly upping their game and breaking through the latest firewalls. So they're not static, and it's not a static risk. So it's an ongoing issue that your partners have to keep abreast of. And educational institutions are a prime target. And on top of all that, there's additional standards for higher education, just mentioning the GDPR statute right there. Do you know what those are? Do you have the time and expertise to find out? A lot of our clients, they're wearing multiple hats at their institution, and they don't have time to research every one of those rules and regulations. Numbers are always telling, and really these slides are just to kind of give you a breath. You know this is an issue, obviously, but again, I want to point out that it's the hacking and malware, and then just this unintended disclosure of phishing that is prevalent in the environment today, especially within the educational system. Interesting chart. So a lot of people, we know that cyber breach is an issue, but 52% of them are either human or system error. So the point there is that 52% of the breaches truly are preventable at the institutional level. Just some definitions on common types of cyber attacks. Most of you are familiar with those, so we don't need to go into detail on those. Over 500 educational institutions have been affected by ransomware in 2019. 500, whether it be attacked through third-party cloud providers, and the demands are getting bigger. The cyber criminals are saying, hey, we might as well ask for the moon, and maybe we get 10% of a big number is still a good number. And it is the email attachments, as Brian alluded to, that he got caught up in. Just an example of a phishing scam in a Kentucky school, $3.7 million. The school sent electronic fund payment they thought was a regular vendor, but it was faulty routing numbers. So these next couple of slides are just really for you to assess your own cyber policy and exposure, connect with your current agent or broker, and just make sure that these are the areas that your policy, if you have one, responds to. The cyber crime, which is the loss of funds with social engineering exploits. Obviously, we've talked about ransomware. Does your policy respond, investigate expenses, and make ransom payments? And what about business interruption? What about if students don't enroll because your system's down, and we can trace that down, and there's a loss of income for that semester? And then, of course, the big one is the incident response after a breach has occurred. Again, we would love to be able to control all of it. It's not just a matter of if, it's a matter of when you're going to be breached and how are we going to respond to that. So the three areas are the incident response, and these are the areas in that, so you can use this as a checklist. The average breach cost is $178 from an incident response. System damage and business interruption, the average loss of profits, and then system damage, whether it be computers, reprogramming, putting back the network, is over $343,000. And then you have, those were first party issues, and now you have all the third party liability issues about people getting sued, including presidents, directors, and officers, executive team at the school that they didn't do their job in protecting the data and protecting the students and the students' families from this hack. Some of the training and response resources that most of your policies that you should have and that we have with our tailored policy for higher education is, do you have an assessment of a tool to assess your vulnerabilities? That's what we have in a cyber risk hub, and it gives a roadmap of kind of where you are. How is your breach? Are you protected? Where are your gaps in those areas? And that's why, again, Brian and Eric are valuable resources with that. And a lot of these are additional tools. Once a breach happens, do you have the team? Does your policy have the team? Do they partner with the experts that can come in and as the SWAT team and get you back operational in short amount of time, including the training for your team? So what are the important questions? They're right there about what are the limits, single, multiple, what are the hardware costs, what are fines and exclusions in your policy. And then just some conclusions. There's more regulations coming, and you just need to be as diligent as can be. That it was the quickest cyber overview I've ever done. For the sake of time, I hope you've got a couple nuggets out of my piece of the presentation. Again, these slides are going to be available along with the recording after the presentation is over. So again, if you have any questions, now would be a wonderful time to to put those in the chat box. And again, the question is, does IMA provide complementary resources like the prior two vendors? And yes, we will assess not only the insurance policy placement that you have, but then also we have tools that and partners that can assess your network as well. So we'd love to visit with you more about that. Our contact information for the three of us is up on the screen, and we also do a complimentary review of your insurance placement, and we have a dedicated cyber risk team, and obviously a policy that we've negotiated by leveraging the group of our higher education clients, and then also our affiliation with the Coalition for College Cost Savings, 900 schools that are members of that association too. So again, would be more than happy to answer any questions on that offline. My email is there, as is Brian and Eric. With that,
and Blake,
it is now
Blake, yeah, I was going to say, Blake, thank you very much. This is Brian Cook, and really to follow on, that's our job. Our job is to help you with any concern in the entire procure to pay and cyber risk and technology processes. And
indeed,
if we do not have the answer, we know where to get it.
Yes, sir.
And we know what resources are available that will help expose the biggest risks that you have and provide solutions on how to mitigate that risk. So please leverage us. That's our job. And Eric, were you going to follow on to that?
I just was going to agree with you, Brian. That's our job, is to provide, resources and help. We want to all come together as one, and so we're here to help. I'm certainly here to help, and my entire staff is as well. So thank you, Brian and Blake. Thank you both.
Thank you very much, and that concludes our webinar.